Good morning, ladies and gentlemen. Hey, my name is Britton Johnson. I am blessed to be the founding partner of Voluntary Insurance Partners, and we are a work site benefits brokerage house that works with small businesses and business owners who really care about their employees. They think of their people as if they're family. They want to do something for them when it comes to benefits, but understanding that a budget comes into play, logistics come into play, questions come into play, you don't know where to start. Man, that's where we shine. All right. Reach out to us. We are here to help. Today's topic, I am very excited to talk about today's topic because these are some things that honestly I didn't even know. I didn't even think of. I knew about it, but I didn't even really think about this until I'd been in the business for about 16 years. So I want to talk about the structure of carriers. You go, wait, what do you mean? All right, typically in the insurance world, there are three types of carrier business models out there, okay? So you have publicly traded carriers, you have private equity carriers, and you have mutual carriers or mutual insurance companies. So let's talk about what those types of companies are, what they mean, and the premise behind it. So a publicly traded carrier is an insurance company whose stock, their value, the investments, their portfolio is based on the New York Stock Exchange, NASDAQ, or the markets, right? So give you an example. You've seen a lot of publicly traded carrier companies on TV commercials, right? You might see some ducks or some lizards or you know, what other animals are out there, some deer, right? Those are publicly traded carriers. And I've got to be very blunt, okay? Listen, they're good companies. There's good people that work in those companies. But understand that a publicly traded carrier, when it comes down to it, when it comes to claims, when it comes to service, when it comes to you as a broker and how you're treated, and transversely, that ends up how the client is treated, those carriers are typically focused on shareholders, okay? Now, I'm not saying they've got bad service, but understand that their focus is on the shareholder, not the policyholder, definitely not the broker, okay? And the agent that's trying to write their business. So understand that they are more concerned about their stock price. That can affect rates. That can affect things for you as a broker on the back end. That can affect manipulation. It can affect who owns the account, relationships. That can affect a lot of things. Now, again, I'm not saying all publicly traded carriers are bad. In fact, one of my top carriers is a publicly traded company. Now, that being said, that's a group product with no portability. It's kind of black and white, cut and dry. Takes a lot of the emotion out of it. But understand that those companies are publicly traded and designed for the shareholder. All right. Now let's talk about private equity, okay? Private equity is interesting. So private equity is an insurance company or an insurance carrier that is owned typically by investors that are privately held, okay, not publicly held. There are pros and cons with private equity. Pros, they can definitely be a little more nimble than a publicly traded company, right? So when it comes to industry changes in the market, adaptation of policies to make sure that they're staying cutting edge, private equity can be pretty good. However, private equity can also be a big detriment too, okay? I'm gonna give you an example of a scenario. Voluntary Insurance Partners decided to start offering some products about a year and a half ago from a carrier that was private equity. They had plenty of money. They had $16 billion in assets. So we knew that this wasn't going to be a problem paying claims. And the representatives, the sales representatives that we had from that carrier, the wholesalers, they were really good people. I've known them for a long time. They've got a great reputation. I've worked with them with other carriers in the past as well too. So I felt pretty comfortable in launching this carrier. They were willing to do some things that some of the other carriers wouldn't, so we could actually fit more of our client base, which is really great. However, unbeknownst to anyone, that private equity carrier just decided to arbitrarily stop offering their benefits. They gave everyone about 1 week's notice at the most. We had 2 clients, I never will forget this. We had 2 companies enrolled in their benefits. We were going to process those policies, and then after processing those policies, well, right before we processed those policies, the carrier informed us that they have canceled. In fact, they didn't even inform us. The representatives that we worked with informed us that they were losing their job because of this. So that might have been one of the worst moves that I've ever seen in the industry when it comes to carrier behaviors. Very unprofessional. They had the audacity to reach out to us to see if we wanted to continue to sell those policies to our clients. And we're like, there's no way we're gonna hitch our clients with a company that's gonna make moves like that. So there are some downsides to private equity. However, I've seen private equity do really, really well because they're extremely nimble for folks. I'll give you an example. We work with a company that provides virtual primary care. And that virtual primary care service is amazing, right? And because they are private equity, they can enhance their products and just make them better and better and better. Now, that company has a long-standing history of success, and we do really well with them. We're not as worried about them as what happened with the other carrier that I was mentioning before. All right, now let's talk about my favorite, and that is mutual companies. Now, mutual carriers means that the policyholders are the shareholders. In fact, let me give you a little history of mutual carriers. Mutual companies, because policyholders banded together and they are the shareholders of that outfit. And there's a lot of great ones out there, okay? Assurity is our flagship, and they're a mutual carrier. Mutual of Omaha, Mass Mutual, USAA. Those are all insurance carriers where the policyholders are the shareholders. It's kind of like a credit union versus a bank, right? It's kind of the same way. Now, the great part about our mutual carriers is our claims departments understand that the policyholder is the shareholder, right? So they're gonna focus on making sure that claim gets handled. That employer who's dealing with invoices, guess what? We give them white glove service because they understand that they are the shareholders in their business. By having a vested interest in you, they provide a much higher level of service. Additionally, unlike publicly traded carriers, when it comes to the broker side, most mutual companies, not all mutual companies, but most mutual companies, they treat you like a partner rather than an employee, right? So, and there's a pretty big difference there, just saying. So a lot of people, they don't understand those 3 different dynamics. I love to work with mutual companies. I believe that mutual matters, and I believe in the long run, in the long haul, it pays off. Let me give you another really cool stat about mutual companies. Did you know that mutual companies are the one company that didn't show losses during the Great Depression? Mutual carriers have even paid dividends to their policyholders during the Civil War, if you can imagine. So they are so secure, they are so stable, and they are modeled very well. Now, the downside is underwriting can be a little bit challenging with some mutual carriers, but we work with mutual carriers that focus on our business, that do good by us, and are gonna do the right thing ultimately. So those are the 3 types of carriers. We work with all 3, but understanding there's our pros and cons, and it's good to know the differences between those. Hope this was beneficial. Hope you have a great one. We'll talk to you soon. Take care.